Hello traders. Um, Hope everyone is good, guys. Here's another trade breakdown on GBPUSD. Um, Guys, since I've studied time and price, um, I'm becoming a little bit obsessed with price and time. When I'm talking about price and time, I'm talking about sessions. I've seen um, a really nice price action, especially that phenomena where, what can I call it, um, where one session lead to another session, and it's in sync, it creates an awesome nice price action, a series of mitigation, um, and order flow, bearish or bullish order flow. It's really nice, guys. This is my third video on talking about time and price, executing our trades during session, especially um, GBPUSD and Euro USD. From Frankfurt to London, and from London, Frankfurt to Frankfurt to London, London to New York. Each session creates a liquidity that will later on be mitigated by another session, or each session creates its own liquidity. Um, in the process, mitigated liquidity. Each session creates liquidity, mitigated, so on and so forth. But with only these three videos, I cannot draw a conclusion um, on specific behavior, on how the pair moves. But what I'm sure of, it's not always a picture perfect scenario. Um, I'm sure there are other days where the price just, even during those sessions, just moves. But most importantly, or more cases, there is a healthy price action um, all the way to 1 minute. But we cannot just blindly go to 1 minute and see this session leading to another sessions. We have to do top-down analysis all the way from a relative higher time frame. Let's say from day all the way to 1 minute. Make sure that we're in line with higher time frame. So guys, I'll show a screenshot. This is a before screenshot. We'll get to a trade breakdown and explain everything. At the time of this trade, I was just reading price and waiting for runs of liquidity. I wasn't aware of this beautiful thing, time, sessions. So next guys, let's get to the charts, and this is an after screenshot. A nice trade to the upside. Let's get to the chart. Yes guys, this trade this was our trade. It's based on this is one of my confirmation counter trend trade where I buy it to sell it at the top. Remember, even if we are trading counter trend, we need um, confirmation. We need confirmation, and the accumulation. It's a like I explained in my previous video. It's more of a advanced structural manipulation. It's not a pattern or a strategy because in accumulation there are lots of types of accumulation just to understand the price and how the price manipulates the liquidity. Like Pips of Pages said, accumulation it manipulates the price, creates a downside liquidity and break strategy to the upside. But in this case, this was in reaccumulation. You see, we take this counter trend trade to sell it at the top. So this was my case to buy it later on to sell it. I already did a trade breakdown on this trade. So let's get to lower time frame. Okay, before I get to lower time frame, you see, guys, this is a lower low of a high time frame structure. This lower low, you see the price accumulated nicely. This is our preliminary support, selling climax, automatic relation, secondary test, testing phase B, and this is our first breakout structure. And you see how the price stalled after breaking this structure. You see how this price stalled above, which shows us that the price is not just only taking liquidity above the slower high. It's simply a breakout structure. And that's another thing we should take into consideration to see after the price break the structure, is it stalling around that BOS, or should I say it spends some more time above, it doesn't rush back into a trading range. And you see this accumulation, this is our first breakout structure, and that's where our accumulation came. You see, at first it started to distribute. When it started to distribute around this area, it's created a PSY and a buying climax and a sign of weakness around this area and the UT and the U10. And I'll talk about adaptability. In forex markets, you should be able to adapt, to not stay married to a directional bias. Because in this case, the price distributed and reaccumulated or distributed and accumulated, or should I say reaccumulated within the same range. If you saw this distribution, and another thing, you see the price create this higher high, higher low, higher high. A lot of people definitely saw this bullish order flow and they were buying. They were buying around this area. And the price started to introduce these shakeouts. It's manipulated all the liquidity below and tap to this demand zone. And let me show you something. Let me show you something. you see that every demand zone was mitigated. Every demand zone was mitigated. Yes. Every demand zone was mitigated. Only this one, that sponsored the break-off structure, was left unmitigated. Every demand zone below was taken care of, was mitigated. So, excuse me, yes. So the price didn't have to go below this point. If the price went even by a pipette, we will have changed our bias. But it took the liquidity below. If you look at it by just market structure, not Wyckoff, you see this inducement, this liquidity grab, and the price went on above and broke this creek, jump across the creek, and there were break and retest traders who were also manipulated. You see the price is creating downside liquidity and manipulated the downside liquidity and break the structure to the desired direction, and which brought us to our trade. After this move, the price created this creek, this momentum trend line, this momentum trend line. Like I explained before, we have to be able to read the price. You see, again, this demand zone, they sponsored this break of structure. Below this demand zone, there are no other demand zone. Every demand zone was left, rather was mitigated. Only this one, and the significant one that sponsored the break of structure. I expected the price to, excuse me, to mitigate this point of interest. Let's get to lower time frame. You see, now we get to time session. You see, the price mitigated our point of interest during, if I'm not mistaken, a Tokyo session. Tokyo, Sydney and Tokyo was overlapping around this area because it's 2 a.m. UK time. The price mitigated our point of interest and went on to create this high. But we're gonna see this interesting, very interesting concept. But the price went on back to our, this is our point of interest, high time frame point of interest. And the price, hey guys, the price went back to our point of interest. This is our Frankfurt Open and this is London. I'm going to show you something interesting. Something very interesting. During Sydney and Tokyo session, the price mitigated our point of interest and went on above, but it went back to our point of interest. look. You see, Frankfurt open 7 a.m. UK time, which is 8 o'clock my local time, and it's created this upside liquidity. This upside liquidity. It's more. It's had before Frankfurt opened. There was this call highs, and it's introduced this demand, rather this supply, and went on to create these equal lows, liquidity, and went on above and manipulated these equal highs. After manipulating these equal highs, and it went below and manipulated these equal lows, that Frankfurt session created itself and mitigated, went back to our area and mitigated our point of interest before going above. And around this area, 8 a.m. UK time, and it's 9 a.m. my local time. London open, and it's created this bullish structure, this bullish order flow, created this higher high. And you know, below that lower high, there is a liquidity. And later on, manipulated that liquidity and went on and created these equal highs. And went below and cleared this liquidity. It's first it's opened, then created this higher high and manipulated this lower high. In that process, it created these equal lows and went on above and create these equal highs and went on to manipulate these equal lows and mitigated this point of interest, which sponsored this break of structure. You see, from a significant point of interest, rather sponsored the break of structure and created the liquidity and mitigates this point of interest and went on above and created and manipulated this liquidity. It's created above here. Guys, this is so cool. It's really interesting. And it's went on to the upside. To the upside. Sorry guys, sorry. It would have been better if we had a trading view. It would have been better. But soon we will. be able to afford. You see, it went on above this high and created a new high. And this is the magnitude of knowing your structure. Because around this area, after the price created this high, we would have taken our partials and or take entire profit because sorry guys, this is a 2 pip stop loss. This would have been a really nice trade. Just 2 pip stop loss and 90 pips. This is a nice one, is 45. Around this area, just even if you just close entire profit, it's really cool. It's a nice RR. And around this yellow line, New York Open, and introduce this demand zone, and when it's on, creates this high. And around this area, people were expecting to buy. And later on the New York session, look at this move. It's manipulated this liquidity. And let me see. And this area around here, Sydney Open, which created this liquidity. And later on, you see during the Asian session, you see the price moves. It's not interesting actually. And at this area, a lot of people were expecting to sell. And the price created these equal highs and later on manipulated these equal highs. And this is and you see during Asian session the price created this liquidity, these equal lows. And this is the next day. And remember the price is distributing. This is a distribution. And later on the session, so guys, rather the next day, the next day, the next day, yeah. Frankfurt opened around this area. Yes, around this area. And manipulated this momentum trend line. A lot of people were selling here were manipulated, and the one that were buying here were manipulated. And this red line, London open. London open, which went on added to this added another equal low to this Asian surging liquidity, and the London opened exactly at this liquidity, and it didn't grab. It went on because the more there are touches in a trend line, the more reliable. Remember, hours earlier, from yesterday, New York surging, this liquidity, and the Asian surging continue to create another liquidity, and Frankfurt Open manipulated this liquidity and went on London Open exactly created this equal lows and mitigated this point of interest and it's continued to the downside, manipulating this liquidity, Asian surging liquidity, and went on to the downside. Remember, we still bearish, rather bullish on overall, because you see this bullish order flow. We sell it here to buy it. The first entry, you take partials on take inside trade off, and I think guys this is a really interesting concept, really interesting concept, and it's going to be my breakthrough. I see. And around this area, New York Open, and it's created this momentum trend line, and later on the session manipulated it to the upside. So I was expecting a reaction around this area, but then I didn't get the reaction. So guys, that was my trade breakdown on GBPUSD, and I hope you can see that time and price are really cool, and you see a series of mitigation, a nice order flow. You see how one session is leading to another, creating the liquidity, which later on will be mitigated by another session. Like they're in sync, it's like they're working together. So if we include like this as my one of my trading rules, I hope I will see a breakthrough. So like guys, this is my third trade on time and price, and I think after 50 case studies we will be able to draw a conclusion maybe on how the price reacts. Remember, you see our overall bias, it's down, we are bearish, but we are taking this counter trend to sell it at the top. We know we're taking our entire profit at this daily order block, and you see our sessions, we, how can I put it, we make sure we trade with a high time frame bias. We do not just randomly trade it session, or I hope you understand. We're taking this counter trend we buy it to sell it at the top. So we always do a top down analysis. We always with a high time frame bias. but we take time and price into consideration, sessions, behavior, one leading to another. So guys, hope you'll enjoy the video. If you like this content, please subscribe and leave a comment if you have something to say or suggestion. Guys, please forgive me for poor audio quality. I'm just using my laptop. Later on, when I'm affording, I will buy. But if I see a lot of people subscribing, I'll be really glad to drop such content. And I hope it will be helpful. So guys, thanks. Enjoy. Cheers. See you on the next one.